All right, here we are, mid-morning, 8:35. I've done no trades today, and told the guys in the room this morning I probably wouldn't be trading in the morning, and we'd probably go higher. And I was looking for a pullback to the high teens. We never got it, and we've proceeded to go up as I thought we would. Without me, we are trading 8:36 as we speak. We've been as high as almost 8:39. And you see here on the chart that just drew a year chart from the high in January to the low in March. And the 61.8 line is right here at 833. We're trading 836 on the S&P. And not a lot has changed. We've got this fantastic mark-to-market change in accounting rules where you can make up any price you want, and accounting satisfies those needs. But until I said this morning, but until banks decide to buy other banks and their crappy assets at their crappy inflated prices, which isn't happening, none of this really means anything but conjecture. And it continues the game that the Obama administration is playing, which is talk, 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 talk. Try to get people to spend money and go out and ask their bankers for money to borrow. That's fine. That's all great. And if they can get people to do that, it'll work. However, I still go back to where are the jobs that the bankers now are going to come back to the people who want to borrow the money. How are they going to be able to pay for these loans without jobs? Job numbers today came out worse than expected. Tomorrow we have the actual job report. It's the first Friday of the month, and they'll be bad just as expected, and we'll see how the market reacts to that. That being said, again, not much has changed. You can see if you go back to January, we basically had a month of this trading zone of 800 to 880. So we're right smack in the middle here at 840. Let's call it. We've hit almost 840 as we're trading 835.50. And one thing I do want to point out here is the banking index, with this good news, has not made a new high today. So at least yet. So here's the banking index, BKX, and you can see here we have not made a new high on the banking index. Approaching it, 31. We've banged. This is basically the third time. The first time was back almost 2.5 weeks ago. We hit 31, and then we sold off to 25s, and then we rallied right back to 31, sold off again to 26. So we had just a marginal. This is basically mirroring the S&P move that we saw. And we're again banging up to 31 here, but we have come off again. We're trading $30.15. Now, if we close over this on the close, which I suspect we'll give it one more shot, the old college try again, we'll probably go above this 31 area, as you can see, and run to the 61.8 area on the banks, which is 34.83. So I would look for some type of move up into here. If we close over this 31, you're off to the races, and probably go up to that 34.83 area at least on the banks, and the banks will have another leg to run. As far as the S&P is concerned, again, this 830 to 880 area is kind of a vacuum. We could trade within that. If you go back to that S&P chart, we are in the middle. We're just entering that 61.8 zone right here. If we close over this 833, and we could pull back to this the 6-week period where we traded between 830 and 880. So that's where we are. We're still below the year's highs. The chart here is clearly bullish now. It's remained bullish. This is a daily chart now, and the chart turned bullish really back here when we finally closed here about mid-March at 740, and we've been up 100 points since then. So name your time frame to define your risk, and this chart did turn bullish on a daily chart back here around the 15th. Not here on the bottom at 666 at all, but about 10% up here at about 740. This is when the daily charts finally told me that you wanted to have a bullish bent, and that has continued. Nothing has changed. This, you can see, we've stayed above the moving averages here, and actually the slow is crossing the fast is crossing the slow moving average here, but we are getting somewhat overbought. Tom DeMark's right smack in the middle, telling you directionally not a lot. So we could go higher, we could go lower, and that wouldn't surprise via the DeMark indicators. But again, you're coming into the price levels of 830 to 880, and then from there you got 880 to 940. So you got resistance all above still, and if you were able to even go back further on the chart, and this is just a year-to-date chart, so 3 months essentially. But if we went back a year on this chart, a different time frame, you would see that again we are not very bullish overall. Although the daily chart looks okay, we still have not taken out the most recent highs, which were 940, and from there, from 940 you basically have a carryover up to about 1100. So we could see a rally all the way up to 1100, still have an overall bearish bent on this market. So that's where we are. We're in this kind of middle zone, and you got tons of congestion in this. Really 6 months era, the 6 months congestion here going back to last October when we made the lows in early November. Here the first lows and then the second lows. I know we're going to go back and test somewhere in this 700 to 750 area. We may go to 940 first, but we will go back and test that still one more time, I would bet, and put in at least another right shoulder of this chart. That'll take some time, but this is not a buy and hold market still. It's still a trader's market. You need to continue holding that mantra.